Welcome to this episode of Markets Week Ahead, where I give an update on what transpired last week and what could drive the markets in the week ahead. If you like this video, do subscribe. Indian equities had a weak week, with the market struggling to find a clear direction. The Nifty fell 0.83%. It was not a major sell-off, but buyers never really managed to take control. The biggest pressure came from West Asia and crude oil. Brent crude moved closer to $90 a barrel as hopes of US-Iran peace agreement weakened. The rupee also remained weak, around 95.48 against the dollar. Corporate earnings provided some strong numbers, but the market reaction was selective. Titan reported a sharp rise in quarterly profits, while Tata Motors passenger vehicles and several other large stocks came under pressure after the results or related development. Leadership seems to have started to shift. The change in sector leadership was quite clear. Metals, auto, IT and PSU Banks, which had performed strongly in the previous week, all gave back some ground. Realty was the strongest sector, rising 1.09%. Mid caps and small caps also held up better than the main index. Banks, autos and metals slipped, while the India VIX actually fell 7%. So, although the benchmarks were under pressure, the broader market was not showing the kind of widespread weakness that usually accompanies a major sell-off. The earnings season is showing a wide gap between companies that are being rewarded and those being punished. Strong numbers are attracting buyers quickly, while disappointments are leading to sharp sell-off. Anyways, nearly all the earnings have been announced as of now. Crude oil remains the biggest market risk. Any further escalation in West Asia could push oil higher again and bring the import bill, inflation and rupee back into focus. The shifting of United States aircraft carrier USS George Washington to replace USS Abraham Lincoln indicates that the issue will simmer longer. Brent has already shown how quickly geopolitical developments can affect sentiment. If oil prices remain under control, some of that pressure could ease. The Tata Group situation may also remain on investors' radar after Mr. Chandrasekaran said he would not seek reappointment beyond February 2027, which is his retirement date. The initial selling in Tata stocks has already been followed up by selective buying, so the next few sessions should show whether investors continue to treat the issue as a short-term concern or keep demanding a higher risk premium. The broader market is another area worth watching. Mid-caps and small caps held up better than the Nifty this week. If that continues, it should suggest that investors are still willing to take positions, even though the benchmark remains below recent highs. For the Nifty, 24,300 is the immediate support zone. On the upside, 24,450 to 24,500 needs to be reclaimed before the market can regain stronger upward momentum. How the index behaves around these levels, along with crude oil and development in West Asia, should set the tone for the week ahead. Thank you for watching.